Hey everyone, welcome to the DDF Heatmap tutorial. This is one of our most important indicators in the entire system. So the DDF Heatmap is actually generated minute by minute. So every minute it updates the entire thing, not just the line, but all of these bars here. Those bars are changed minute by minute. However, you might not see them change so much because those are the liquidity. That's the liquidity, the orders of all the banks, big players, etc. Those are their actual orders, and it's not going to change very often. However, the stronger the color, the bigger the order, the stronger the liquidity there. So you can see right here, it's kind of dark. That means it's more neutral than it is blue. However, these right here where it's very strong blue, that means it's a very strong buyer interest liquidity there. The colors are the delta of the puts and calls. So it doesn't mean that everything here is blue and everything here is red. No. What it means is that the delta or the net of all of the options are more blue here and they're more red here. The delta, let's say you have right here, you have 50 puts, but you also have 30 calls. So the delta is 20 puts. So it's more sold than it is bought here, but not by a lot. But it's still more sold than bought. Okay, so if the price trades on, let's say, a blue background, that means much more people are buying. So it tends to go up and vice versa. If you're trading in a red background, that means much more people are selling and it tends to go down. That doesn't mean it has to. If you have a very strong blue background like we have right here, and it aligns with one of our targets, let's say we have a bear target right on top, then it's very likely that the price will go there. However, it is still very possible it hits a very strong blue bar like right here, like we see right here. It hits a very strong blue bar and it aligns with one of our targets and the price goes down. After reaching a target or a very strong blue bar or both, there's still a very strong chance of going back down, whether it's because of the liquidity or being a bounce level or the market might have changed. It's still very possible and likely that the market will go down in a blue market. So don't think just because we're in a blue market, we have to go all the way up and we can only go up. No, if we're in a blue market, we can still go down, and it's very possible that we might go down. Just like you see here, we went up and then we went right back down, and now we're entering into a red market. Just because it's in one of the backgrounds doesn't mean it has to stay in one of those backgrounds. The only time it won't go down is if there's an even bigger blue bar above it. Then it'll go and reach that one. And of course, same thing goes for the red. You can actually edit this heat map with these bars right here. So here on this third one, you can actually see the transparency. The more transparency, that means the stronger, the more orders it has to be for it to show up. The less transparency, the less. The strike range actually shows you how many strikes you can actually see. So if we go from 50 to 100, we can see a lot more strikes. We can see even further into the market. If we go to the less, we don't see anything. And up here, we see the historic range. So right here, it's on the lowest. If we go and raise it more and more, we can actually see more into the past. So we can see the historical difference of the market and what it did. And that's the DDF heat map, one of our most important indicators in the entire system. We use this to confirm, we use this to take trades, and we use this with the daily trading plan every single day.